Attention CA Inter students, we are discussing CA Inter Jan 2025 Paper 1 Advanced Accounts MCQ portion solution. It's purely for educational and in academic purpose. There may be difference of opinion. Okay, so let's start with the discussion. Number one, the first question is on cash flow statement. The following summary cash account has been extracted. Okay, so what has been asked? If you see what has been asked, they are saying which of the following would be considered as cash flow item from investing activities, then from operating activities, and so on. So when you're reading the question, we'll quickly mark it. This is the opening balance, then this is cash sales, that's a part of operating, trade receivable part of operating, rent from property held as investments, this is a cash flow from investing activities, income tax refund, that will be operating part, then loan from bank, that will be financing, issue of shares financing, sale of investment is investing activities, trade payable, that is a part of operating, then office and selling expense, operating, trade commission, operating, underwriting commission is a part of financing, redemption of preference shares, part of financing, brokerage on sale of investment activities, and interest on long-term borrowings, that is a financing activity, payment of overheads, operating activities, purchase of goodwill is investing activities, and this is the closing balance. What is the question number one? Which of the following would be considered as cash flow from investing activities? Trade commission, underwriting commission, purchase of goodwill, and interest on long-term borrowings. Obviously, purchase of goodwill. Then what would be the value of cash flow from operating activities? What were the operating activity content? I picked that and done it. If you see here, cash flow, cash sales inflow is there, trade receivable amount plus the tax refund minus we have done the trade payable, office and other selling expenses, trade commission, payment of overheads. The amount should come to 1,54,500, which is your option number A. The next part is what would be the value of cash flow from investing activities? If you see investing activities, we had picked up rent from property held as investment, sale of investment, these two are inflows. Then brokerage on sale of investment is negative, that's outflow. Purchase of goodwill is negative outflow, 54,300, that is your option number B. Next is what would be the cash flow from financing activities? So we have taken loan from bank, that is inflow, issue of shares inflow, underwriting commission is an outflow negative, redemption of preference share is negative, interest on long-term borrowing is negative, so you will have a total of 1,60,600 negative, which will be option number D. Fine, let's move on to the next question. What does the next question say? Glow Limited has taken a loan of 5 lakhs in June 2023. The loan is to be repaid in 10 half-yearly equal installments starting from December 2023. Determine how the remaining loan will be classified in the balance sheet as on 31st March 2024. 10 half-yearly installments. So if you see here, 5 lakhs divided by 10 half-yearly, matlab over a period of, if you see every installment will be of 50,000. Every installment is of 50,000. One installment you already paid in December 2023. So out of 5 lakh, one installment is paid in December 2023. So how much is the pending loan? That is 5 lakh minus 50,000. That is 4,50,000 is the outstanding loan. But this is a 5-year loan. So 4,50,000, out of that 1 lakh will be due in the coming year 24-25. Matlab June 2024 mein one installment will be due, and December 2024 mein another installment of 50,000 will be due. Total 1 lakh due is in the next 12 months. So out of 4,50,000, 1 lakh will be due in the coming 12 months. So that will be a part of short-term borrowings, and remaining 3,50,000 will be part of long-term borrowings. हम देखेंगे ऑप्शन नंबर A में 350, 75 doesn't appear correct. 350 and 1 lakh. Yes, this is right. 350 will go to long-term borrowings. 1 lakh will go to short-term borrowings. Clear? So let's move on to the next one. What does it say here? On 1st April 2019, Black received a government grant of 15 lakhs for acquisition of machine of 50 lakhs. This grant is credited to the cost of machine. So matlab obviously 50 lakh is the cost of machine, 15 lakh rupiah grant, so net is 35 lakhs. So what is the net cost of the machine now? 35 lakhs. The life of the machine is expected to be 10 years and the estimated residual value at the end of 10 years is 5 lakhs. Matlab if I want to know the depreciation minus 5 lakhs, so 30 lakhs divided by 10 years, so obviously 3 lakh is the depreciation per year. That much understanding we have got because the question says depreciation in on straight line basis. Due to non-fulfillment of certain conditions, the company had to refund the entire grant on 1st April 2021. Means you would have taken depreciation for 1920, 2021. So 2-year depreciation you would have taken. So obviously 3 lakh into 2, 6 lakh rupee ka depreciation you would have taken. मतलब अपना machine का cost was 35 lakhs minus 6 lakh depreciation we have done. So 29 lakh is the value on 31st March 21. Correct? Now they are saying on 1st April you have to refund the entire amount. So what will happen? Will it remain 29 lakhs? No. On 1st April you are going to refund. So plus 15 lakh you will have to give back. So total will be 44 lakhs. On the 1st of April 2021. Now what they are saying, on 31st March 23, Black received certain indications of impairment of machine and the recoverable amount was ascertained as 28 lakh with a revised useful life of 4 years and nil residual value. So this is happening on 31st March 2023. Correct? So now we will have to calculate depreciation for the year 21-22 and 22-23. How will I calculate the depreciation? 44 lakh minus 5 lakhs is the residual value divided by how many years pending? Out of 10 years, 2-year depre to be already provided. So 8 year left out. So 8 years. So 39 lakh divided by 8 years. So if you do 39 lakh divided by 8 years, that will come to that will get you the depreciation. So that should come to roughly 3 lakh, what does it come to? 4 lakh 87,500 is the amount of depreciation. So 487,500 is a depreciation for 21-22. So the value will become 3 lakh 12,000, 39,500, 39 lakh 12,500. Again depre for the next year 22-23. So after 2-year depreciation, we have got the amount as 34 lakh 25,000. Clear on it? Fine. Next, what they are saying. On 1st April 24, then what was the point? The point was the net recoverable value on this date is 28 lakhs. That was a contention. The net value after on 31st March is 28 lakhs. Correct? So if you see here, our value, carrying value is 34 lakh 25,000. So 34 lakh 25,000 is my carrying value minus 28 lakh is the recoverable value. If you see 6 lakh 25,000 becomes the impairment loss. So हमने impairment loss को minus कर दिया. The revised carrying value is 28 lakhs. This is a value which we will have as on 31st March 23 after the impairment, 28 lakh rupees. Now what is the story further? On 1st April 24, the company exchanged the machine by paying cash 2 lakhs and new machine of 18 lakhs we have got. Matlab, we have to provide depreciation for the year 23-24. How do I provide the depreciation? 28 lakh is the carrying value. Now they are saying there is no residual value, 0. And how many years left? 4 years is a balance life. So how much is the depreciation? 7 lakh rupees. So we'll subtract 7 lakhs. So you will have the carrying value of 21 lakhs. 21 lakh carrying value you have. Now what they are saying, we exchanged it for 2 lakh cash and 18 lakhs ka new machine. So total how much consideration I have received? 20 lakhs. So I am making a loss of 1 lakh on exchange. So 1 lakh रुपया exchange में loss है. So let us check what is asked in the MCQ. What is the first question asked for? What will be the amount of profit or loss on exchange on 1st April? 1 lakh rupees that we have calculated. What will be the carrying amount of machinery on 31st March 2021 after charging depreciation for the year? So what is the value of the machine on 31st March 2021 after charging depreciation? 29 lakhs. Correct. Next, what will be the amount of depreciation to be charged on the machine for the year ended 31st March 2022? So 31st March 2022 31st March 2022, if you see the revised carrying value after we provided the depreciation for 21-22 was 39,12,500. So for 22-23, the depreciation for 21-22, this is for 31st March 22. So for 21-22, the depreciation is 4,87,500. So 4,87,500 is a depreciation for 21-22, that is as on 31st March 22. What will be the impact of test of impairment on P&L? Impairment loss we had calculated, that is 6,25,000. So 6,25,000 is the loss on impairment, which will be debited to the P&L account. Fine. Next, the following particulars are stated in the balance sheet of Star Limited on 31st March 23. The deferred tax asset is 1,20,000, deferred tax liability balance is 2,10,000. Correct? What are they saying? The following transactions were reported for 23-24. What are the things here? Depreciation as per accounting records is 12 lakhs and depreciation as per income tax record is 18 lakhs. So logically, accounting with the depreciation is more, accounting income will be lower and taxable income will be less. Obviously, you would have created a deferred tax liability. How much it will be? 18 lakh minus 12 lakh, that is 6 lakh into whatever is the tax rate. How much is the tax rate? 20%. So 20% tax rate. Very obviously 1,20,000 DTL you would have created for this transaction, since it's a question on AS22. Interest paid accounted in the books on accrual basis but paid on 15th May 2024. Now the interest is paid, which is accounted in the books of accounts already on accrual basis, and it is paid by 15th May, before the tax returns. So obviously this would have been allowable as per the tax records, so no effect of this needs to be taken. Next, employer PF contribution expense disallowed for tax purpose in 22-23, 22-23, but allowed in 23-24 this year. So very obviously in 22-23, when it was disallowed, the company would have created a DTA on 82,000 at 20%, that is 16,400 DTA would have been created. Correct, no? Because that expense was not allowed by the income tax department, but you had taken the deduction in your books of accounts. Now in 23-24, it is allowed by the tax department, so it will become a case of reversal of this DTA. For how many rupees? 16,400. Next, unamortized preliminary expense as per the tax record is 1 lakh rupees. So very obviously this is a deduction which already taken in accounts but not taken in tax. So obviously your accounting income less than the taxable income. So very obviously you would have taken a DTA, that is 1 lakh rupees into 20%, that is 20,000. DTA would have been created. Donation 70,000. Obviously this is a case of permanent difference, so no DTA, DTL would have been taken in this case. And let's check what is asked. What is the permanent difference for the permanent difference item as per AS22 donations? Because PF that was already allowed, unamortized is timing difference, unamortized preliminary is timing difference, depreciation is also timing difference. Next, what would be the value of DTA on 31st March 2024? What was the balance we already had? 1,20,000 balance we already had. So to that you will add how many rupees? you will add, to that you will be adding 1,20,000. To that 1,20,000 you will be adding the DT 16,400 is the reversal case. So 1,20,000 minus 16,400 and plus 20,000 unamortized you will add. If you see the net effect, that will come to 1,23,600. That is your option number C. What will be the value of DTL on 31st March? How much was the balance in DTL on 31st March? It was 2,10,000. And where is the additional DTL coming to? Depreciation 1,20,000, nothing else. So 2,10,000 plus 1,20,000 is 3,30,000. That is your option number A. Let's move on to the next one. What is the case here? What will be the reversal of DTA on 31st March? We have already discussed that. That is related to the Provident Fund. So that was 16,400. That is option number C. Let's move on to the next one. Question number 14th one. ACE Limited borrowed 25 lakhs from ABN Bank during the financial year 23-24. ACE Limited used these funds to invest in equity shares of K Limited. So you're taking loan and purchasing equity shares. What are they saying? K Limited is implementing a new project. So with these future prospects, ACE Limited invest 25 lakhs in K Limited. On 31st March 2024, since the said project was not completed, the directors of ACE Limited capitalized the interest on borrowing cost of 2 lakhs and added the amount of interest cost to the cost of investment. The market value of these investments on 31st March 2024 is 24 lakhs. Identify the correct statement considering the facts as per AS 16. AS 16, that is on borrowing cost. If you see, remember borrowing cost is the interest on the loan taken for investment in equity shares allowed? It's not allowed, because when you're taking loan and purchasing investment, that asset is ready to use immediately. Obviously, the interest on that is not allowed. So let's see the options and mark it. Since the project is a qualifying asset, directors of ACE Limited have correctly added. No, not correct. Interest paid on acquisition charges is acquisition charge, hence the directors of ACE Limited correctly added. No, that's not right. ACE Limited invested in equity share which is not a qualifying asset, therefore the directors are wrong to add the interest on cost of investment. Rather than it should be charged to the P&L account. Yes, perfect, that's right. Last one is saying, since project is qualifying asset, it's not a qualifying asset at all, because it's ready to use the day it is purchased. Let's move on to the next one. What does it ask for? AB contractor undertakes a fixed price contract of 350 lakhs. And what are they saying? The information related to the contract is given below. Material purchase 125, labor 95, unused material. What we do? We subtract from the material purchased, because only the cost of material which has been used is to be taken. But cost of material used, consumed is to be taken. Okay. Estimated cost for further completion is 115 lakhs, and part payment received as from the contract is 50 lakhs. Machinery used for 4 years for the contract. Original cost of the machine is 210. Expected life of the machine is 20 years. What is the amount that will be taken to P&L account on the contract? So let's check. We have to check it on the overall basis, because they are given as the estimated cost of completion for the further contract. That information is available. So immediately we have to check on an overall basis. We are going to make a profit or loss. So for that, if you see, material cost is 103 lakhs plus what are the things you will add? You will add labor of 95 lakhs plus what you add? You add the further completion cost of 115 lakhs plus what you add? The depreciation. How do you add the depreciation? 20 lakhs or 210 lakhs divided by 20 years will give you the depre per year, which should come to around 10.5 lakhs into 4 years will give you 42 lakhs. You add that, so that will give you the total cost. So if you see the total cost here, I have done the totaling for you here, that is 355 lakhs. And what is the value of the contract? 350 lakhs. So 355 is the cost, 350 lakhs is the contract revenue, which is expected on an overall basis. So overall, there is a 5 lakh loss. As per AS7, you have to immediately recognize the loss in your P&L. Correct option will be loss on contract of 5 lakhs is to be taken to the P&L account debit side. Hope it works. Then we'll discuss the remaining next time. Very important part, 30 marks, and not very tough, but if you do it, will increase your aggregate. Thank you very much.